Hey there, if you've been following this series, this is probably the one you've been waiting for. We're talking about the item 19. This is when I get asked all the time. It's on the very first call. Lisa, how much money can I make in this system? Am I going to replace my income? And my answer is usually always, there's no crystal ball. No matter what the FDD says, no matter what, there's no crystal ball. It's a mirror test. It's going to be up to you. But the item 19 gives us somewhere to start sometimes, and it gives us some history. So I'm going to throw this out to Brian from Internicola Law Firm and say, okay, Brian, let's talk item 19. This is probably one of the first spots everybody looks, right?
Absolutely. This is, I know it's your favorite item. And this is really where, when people are signing on to a franchise, they're signing on to obtain a business that's going to generate money, right? So this is the main question when it all comes down to it. How much money am I going to make? So
that's a very important item, Brian.
Right? So definitely. So one thing, some brands don't have an item 19, right? So item 19 is one of the items that is discretionary.
Okay.
So franchisors get to choose whether or not they disclose it.
Okay.
When the old way of thinking about it, the old school way is don't disclose an item 19 because then you can never get in trouble. And this is from a franchisor's perspective, right? So if we have nothing in there, it means nothing can be misrepresented. We can never get in trouble. And that's the way it should be. So you see some older FDD, older systems that don't disclose with that mindset. The newer mindset is, listen, we can't really sell franchises without talking about how much money you're going to make. So we need to disclose something. And they have, there's a lot of, they have a lot of input as to what they can disclose. There are certain rules, but right. Some just will disclose gross sales. Others will disclose a whole P&L with, labor costs and get you to a net profit.
We love those brands, just
yeah,
so you know.
I know, and I think
franchisors that are listening.
Yeah, no, that's definitely most attractive. And then you can actually have a conversation about it, right? So the question that we always get is, okay, you have a restaurant brand, they make $1 million, but what are their food costs? What are their labor costs? What does that mean at the end of the day? And without having that in the item 19, a franchisor can't disclose that, or they're not supposed to. Sometimes. So that's really where the issue runs in. And this is the kind of hot button area. If there's something that's misrepresented in there in the item 19, franchisors get in trouble. Right. So many of them are trained not to say anything about, that's not in the item 19. They have to stick to those numbers that are in the item 19.
Which is usually margins, right? It's usually, you're not going to see margins in an item 19 because what creates that margin can be very discretionary, especially in the size of the system. But then and usually a franchisor in the item 19 is going to share gross. And that can be a great number until you understand what the margin is. So when I'm working with someone and you're working with someone, what do you tell them when you say they say, I need numbers, I need to get to the margins. The franchisor isn't telling me because obviously the franchisor's hands are kind of tied there. So tell them, what do you do?
In certain instances, there's industry standards, right? So for the most part, a restaurant, let's say, talking about a restaurant, food costs are going to be 30%.
Okay.
And that's a ballpark figure. If it's lower, that's great, but roughly. So one thing I would do is kind of get a rough ballpark of what those numbers look like.
Okay.
And it's also going to depend on where your area is, what your rent's going to be, how big your space is going to be.
Absolutely.
But I would also almost do my own pro forma based on those gross sales and kind of back it out and see what number I come out with.
Okay.
Another thing is, speaking to other franchisees in the system to validate, because other franchisees have no restrictions. They can tell you, usually when you speak to other franchisees, they're kind of, they're not going to really give you perfect numbers because that's personal information.
I always tell people that. They're not going to send you the P&L. I mean, you're not going to do that someday and they're not going to do that, but they can usually speak too rough numbers, they can usually speak to margin in some way.
Exactly.
The good business owners anyway.
Right. So they're going to say, well, our food costs are 27%. And then, you know, if you hear that from 3 different franchisees, you can kind of assume that's what yours is going to be similar to.
Okay.
And try to, you know, work that out. But yeah, and sometimes they'll give you their actual margin percentages and, you know, things like that. So you have to kind of, if it's not in the FDD itself, you have to kind of do your investigations and, you know, try to get that information yourself and to the best of your ability.
Okay. So I'm going to ask you a tough one now, and
Okay.
you're probably going to make some of your franchisors, but this is always my question, right? When we're sitting around a dinner.
Right.
So new brand says they don't have an item 19 because they're too new. I know what I say to that answer, but what's the politically correct thing to say, Mr. Brian?
You know what? It's a tough spot for new franchisors. So what we tell if we're representing a new let's say restaurant franchisor coming on, they say, well, we don't really want to disclose numbers, and there's a number of reasons why, you know, tax related issues and things like that. So they may be skeptical initially to do that, and what they'll do over time is you kind of get to a point where they're able to disclose anything, right?
Okay.
And then once they have franchisees, you know, they can start disclosing you know, the franchisee numbers in addition to their numbers.
Okay.
So it gets a little easier. So brand new franchise systems, you know, they're a little riskier in that sense because we don't have that information, you know, to a certain degree. You know, the thing is that we can't really force anyone to do anything.
Right.
And that we're kind of, you know, it's really up to the franchisor. But without any other franchisees, it's tough. You have to, you know, what some franchisees will do is they'll come in and sit in at the corporate location. You know, the franchisor invites them there, and they can kind of just see how active, you know, the business is.
Okay.
Things like that. But
every day becomes more important. Due diligence becomes more important. Looking at like-minded businesses, competition.
Correct. Yeah, and that's you're gonna have to, you know, again, do your own homework and try to figure it out. And sometimes there's great opportunities there. You know, there's a lot of upside when you're dealing with a new franchise system. You can possibly get bigger territories, or, you know, rights of first refusal, or things like that. You can kind of you know, try to take advantage of those types of things. But it's hard to pinpoint it without the actual numbers or franchisees to speak to.
Absolutely. Thank you so much. I appreciate it. This is a big one.
Thank you.